Okay, today's January 12, 2016. Finally got a little bit of a bounce today in the market. So I know it's been a tough start of 2016 to most of you out there. But hey, do not despair because I think there's some, a little bit of an upside, bouncy coming. So you might want to take a look at a few stock. Of course, also pay attention to the earnings season. So some of the stock that I put up or some of the ideas, for you to kind of keep an eye on. Make sure you check the earning date, and don't do what I did. Okay, following think or swim on these little icon here to saying that the earning, because always check your source. Okay, to the best thing is go to that individual company's website, their investor relation page, and check the date on the earning or some of the news media sources. So because you don't want to get caught on holding something that you really don't want to trade to earning, okay? Because I usually do not want to trade to earning. It's just too risky in my mind. It's just like throwing dice. Okay, so anyway, I did come up with 4 stock and also kind of give a little idea on maybe a possible trading or a setup technique that you might use if you're not familiar with it, or maybe just for you to sort of consider and see how you could kind of fold that into your particular method if it is suitable to you. But for some of the newbies, the new trader, maybe kind of give them another things to consider and kind of steady, even though you don't use it. It's good always to know that certain technique that's out there. There might be some trader probably using that, so you kind of get a little idea of what to expect or when price action might occur when you see a certain setup is being played out or being kind of forming. Right, so the first one is Tube. I don't even know some of these companies what they do, but well, there's a few of them that I do, but this one I have no idea. Okay, but anyway, just looking at the price action here. So you can see that also I got the moving average on there. The green is the 50-day. These are all simple moving average, except the blue one here is the 20 exponential moving average, the EMA, and this one is the 200. Right, so you can see that the moving average is kind of converging here. Right, so the price is converting to a moving average. Just kind of give you a so like a a little bit of a flat area, kind of pull back, kind of consolidation. Right, so and also the other thing is I'm using the Fibonacci retracement here. You see this, we have these price swing up here, right? Okay, these price swing up here. And when we draw the line, we always kind of look for a pullback, and usually it's sort of pullback. Like we'd like to see it pull back no more than 50%, or maybe sometime, 68% or so. Okay, so we basically call this zone here, this 38.2, 61.8. This area. It's all depend on these numbers. It's all depend which side that you which end you're counting. You're pulling back the amount of percentage, or you pulling back to these, to the level of the swing, right? The percentage of that entire swing. So that's why if the percentage of this swing is, if you start here from 0 here, then this would be 61.8%. Right, but if you're pulling back from the from the 100%, then you're basically just pulling back 38.2% of the entire swing. Okay, so but don't let that kind of throw you off. It's just that we just basically want to look at this particular what we call retracement zone. So when the price come in here, and what I usually watch for is if the price come down. Do I get a bounce off of this 50%? Now, 50% is not a Fibonacci ratio, okay? So it just happened to be in there as a 50% retracement, because in the past, if you look at a lot of time when anything that retrace 50%, it has a tendency to retrace 100%. Okay, if it go to that 50%, So, but that's the reason why a lot of people kind of got stuck that 50% in there, and it's sort of kind of carried through, and there's some validity to it. So, but anyway, get back to the discussion on this pullback here. Right, basically pulling back to this 50%, and we'd like to see it to come back out of this retracement zone. And if it does, then there's a good probability that it will come back and pull back to 100%. Remember what we were talking about, this 50% retracement is also the same thing as, going down as well as coming up. Okay, so when it comes down to this 50% and it breaks out of this retracement zone, then there's a good chance that we're going to play out this 100. And a lot of time, if you look at it, right, this pullback is like a bull flag, right? Okay, if it's on the upside and it's a bear flag on the downside, then if you do a retracement, you could actually, a major move, you could actually get, if it pulled back to the, to 50%, essentially, 141 is pretty close to that 80% to 100%, right? To the 1618 and the 141. So that's why you see a lot of time when you have these bounces coming off of the retracement zone, it terminates at 141 or 161 or close to it. Okay, so you just want to keep an eye on that. Right. So right now, if it come back up, at least the target that you want to play for is first is this 100%. If you're doing some kind of scaling on your profit taking, then you might want to look at this 100% and then 127, 141 and let it run. Okay, and sometimes it will hit, get up to the 200. It depends on the level of resistance or the previous price support level, right? So like in this case, on this one here, if we look at it, we see that there is a pivot high here somewhere around this 1618, right? It's 1598, so it's about $16 here. So essentially that would be probably a target that we want to hit, if we're going to play this guy here. Okay, then the other thing is, you want to basically set yourself up, to look for some sort of trigger, above the 618. And remember what we're saying, that is that if this thing come down and we trace and it break out, then there's a good chance that it will move up. Now, when are we going to consider that what we thought it was going to do is incorrect? It's when it break out and then come back down, right? So if it come back down, we trace to the other end of this retracement zone, then definitely we're wrong. So basically you could set your stop, using this 38.2 reference level and set your stop underneath that, to have yourself stop out. So now that's how one could define the risk, right? Depend, so essentially, and if you, let's say for example, it's a lot of times we want to do a trade that at least give you 2 to 3 R, in terms of what your risk, right? So let's say if we get this thing here, okay, let's say we enter just slightly above, the 618, and then we put a stop underneath here. Okay, let me go, and that trick of mine that I basically use a Fibonacci retracement tool and use it as a measurement of the how many R is the price be hitting. Let me hide this thing here, so kind of get this away so it doesn't. So you see, if we get in here somewhere around 1315 or something like that, when it can come up here to the 1401, that's 1 R, and here at the 300%, that's 2 R, and this is 3 R, right? Remember we were talking about this particular level here, right? That's our target, right? So you're getting a little bit over 3R, depending how how you're taking profit, right? If you take a 1, 2, 3 and that sort of thing, then you scale out, you should, still get a few R more than, so it still depends how you scale. But, there are some people just basically ride it all the way up until it stall, and then take 100% profit. So again, so those are a little bit of a tidbit for you to consider or to kind of look at, and, not necessarily saying that every time these kind of setup will work, right? It's nothing is 100%. So, but I just kind of give you a little idea, or maybe another way to look at, setting up a trade and defining your risk. Okay, so this is the tube, right? And the reason it looks good is you could also see that if kind of on a little bit of a rising trend, right? Kind of pull back and set up this little nice defined risk area for you to do a little bit of a swing trade, right? Okay, and also got some nice defined target, right? So the next one is Whole Food, right? Same thing, same kind of scenario, right? So it's kind of come up on this swing here, pull back to somewhere around the 50% level, and now we're gonna be kind of looking for this thing to break above this 618, and maybe get up to these target. And also you look at this here, let's say we play for a gap fill, that's 127. Okay, and if we play it all the way up to this gap fill, that is almost up here at this 200%. Okay, so if we do this and this level, that's 1618. Okay, so you can see that there is that possibility of getting up to these level here. Right, and once again, if we use a little tool here, let me go and get this off. Well, let me do this first. Okay, so let's say assume that we get up in maybe we get a little bit of a price trigger here and put this stop here. Right now you get more than enough of a a stop margin, or what I call error margin there. And once again, let me take these out. Alright, so I got my little measurement too. Yeah, this software doesn't let me save these Fibonacci retracement with different number. Some other software that let you save the template, so that way you could just call it up and you don't have to go and I don't have to go and constantly go and change that, because if I change this and make it default, then when I want to do the actual Fibonacci retracement with the 282 and all this other stuff, then I have to go back and reset it. So right, so here we are. We got this. This is 1R, 2R right here, right at this gap fill here, and 3R right at this pivot. Right, and if we get anywhere greater than this pivot come up and fill this gap, then we get more than 3 to 1 return. Right, on the risk. Okay, so you want to look at that. And let me get this thing back before I forget. Okay, and then the other one is Krispy Kreme. Right, again, it's the same thing. Right, same kind of scenario. Come up, pull back. Right, and it seems like it's getting ready for a little bounce. Also, the other thing is this is also, if you notice, it's also sitting on this 50-day moving average as well. Right, okay. And also your 50-day moving average is kind of rising, so it kind of give you a little bit of a confirmation there, right? Okay, so again, we're basically looking at, like, here's the well, let's use that tool again and set up, let's say assuming that we got in on that trade. Yeah, let's do this. It's a Ninja Trader. I could set that as a template, and I could just call it as a template, and don't have to go and reset it every time. Right, but anyway, so here we are. You got 1R, 2R, so it's a little bit less than 2R. Right, on this one here, we get up to this pivot, so that might not be a good candidate. But if you get up here at this pivot, then you got 2R, and then on the gap fill, you're just getting a little bit over 3R. So you have to kind of weight yourself on is the risk and reward is in line of your particular trading plan and objective. Right, so it's not every setup is a good setup. Even though it is good, doesn't mean that it's appropriate for you. Right, so if it's not appropriate, then it is not good. Well, that's how I look at it. Okay, so and then there's the other one. The last one is Semantics. Right, so again, you see it's a similar type of setup, similar kind of play. This one actually came down to the 38.2, and now it's sneaking back up to the 61.8. So basically the same thing. It's just that we got this whole range with this thing. So right now essentially it's also set up the low for you to kind of set up where you want to use as a reference point for your stop. Right, so again, if we go and set this up, right, let's say we do a little bit of a trade somewhere beneath that. Right, okay, and let me once again take out some of these extra line here. Okay, and let me hide this so it doesn't So just kind of make things a little cleaner. Okay, so we kind of get back up here, just 1R here, and here's the 2R on this pivot, right? And here's 3R on this pivot, right? Okay, so again, pay attention to the earnings. Okay, on this one here, it's right now is February the 4th. So we still got a few weeks, okay? But do pay attention to that, okay? All right. Again, you know, it's kind of, you know, the 50 days kind of flatten out. And also it's both the 20 EMA and the moving average kind of converging a little bit, although the 200 day is still kind of coming down. So these are a little bit of a, you know, quick swing trade. You might want to take a look at it. If it suits you, then hey, do whatever. Okay, good luck.